What is going on, everybody? Q here from Hyperstocks. Thank you so much for checking in. In this video, we're going to talk about Amazon's awesome new announcement that they will be doing a stock split this year. This came shortly after Google announced that they will also be doing a stock split, which was announced back in February. So let's first talk about what a stock split is and what it means for the company. So first things first, a stock split doesn't change the value of a company. So right now, Amazon is trading at a $1.4 trillion market cap. So this means that the total value of the company is $1.4 trillion. This number came from multiplying 458 million by $2,800. So if we multiply these two numbers, you're gonna roughly get a market cap of $1.4 trillion. So first thing to understand is not all companies have the same amount of shares available to the market. For example, Amazon has 458 million shares available to the market, whereas Apple has 16 billion shares available to the market. So you can see that Apple has a lot more shares available to the market than Amazon does. So if we were to buy all the shares of Amazon today, you can only buy 458 million shares, which would mean you would own 100% of the company almost. So why does Apple offer 16 billion shares and Amazon offer 458 million shares? Well, that's just simply because when the company debuted, or when they had their IPO, they only put out just enough shares in the market to whereas there could be enough liquidity or buying and selling for the amount of demand that the stock has. Now, over time, if a company doesn't increase the amount of shares in the market, their price is going to continue to go up, and that is if they're a if they're a healthy company. So obviously, Amazon has been on a rally since the 90s, and they have been absolutely phenomenal and growing as a company. But if we look at them in the last couple years, we can see that the company has started to flatten out a little bit. You haven't seen a tremendous upside breakout from them. You can see that the entire time from mid 2020 until now, the company has been moving sideways. And that is because the stock is just a little too expensive for investors to want to buy. So investors, a lot of young investors especially, they want to buy a stock that's cheaper. They don't want to spend $2,800 on a stock because they don't think it's going to give them enough value. So what companies do, and they do this when they want to raise capital as well as when they want to drive more investors into their stock, they will end up multiplying this number, so giving more shares to the public market. Amazon is multiplying this number by 20. So if we multiply 458 billion, let's call it 450 million, by 20, so that's going to equate to 90 billion shares available. So now that we have 20 times the amount of shares available, what happens to this price is it gets divided by 20, which would allow the company to keep the same market cap, but decrease the cost of their stock. So they multiply the amount of shares available to the market by 20, and they decrease the cost of the share to the market by 20. So if Amazon was to split today and it divides 2,800 by 20, the cost per share is going to be $140. However, the market cap or the total value of the company remains the same. So all they're doing is they're increasing the amount of shares available, which will naturally bring the price down by however times much that they increased it by. So what does this mean for Amazon, and what does history show about stock splits? So the most infamous stock split that's happened in our recent years is the Tesla stock split. So Tesla went on an enormous rally in 2020 when they announced a stock split. So they announced the stock split right around these dates, right over here, and you can see that after that announcement, Tesla went on to rally and quadruple in market cap, and this was before the stock split even happened. why does it drive so many people? It's just a popularity thing. It doesn't necessarily mean that the company will be more valuable, but it just means that that people wanted to come in because of the hype around the stock split. Notice what happened right after the stock split. The company corrected, but it went on to continue higher because Tesla was seen as a healthy company. Look what happened when Apple announced their stock split as well. So Apple, on one of their earnings back in 2020, they also announced that they will be doing a stock split, and they gapped up the next day and they rallied all the way until the split date actually happened. So we saw this in Tesla and in Apple. And finally, let's look at Nvidia, which is another popular stock split that took place in the recent years. Nvidia also announced their stock split, and you can see that they rallied all the way up until around the stock split date happened, and then they corrected back down. So does this mean Amazon is going to rally from here because they announced their stock split? Not necessarily, because we're working with a different environment than we were working with in 2020 and 2021. So 2020 to 21 was at a time in which markets were so bullish that things were going up by any type of news that was hyped up or something that was really exciting, which was something like a stock split. Google announced their stock split on their earnings as well, but you can see that their gap up was followed by a hard correction back down. Now, Google's stock split is not set until, I believe, June, so they still have time to recover and rally. So I wouldn't be surprised that as that date comes closer, Google is going to rally because people are going to be more excited about the stock split. Google announced that they will be splitting their shares by 20 as well, which would mean that Google is going to have 20 times the amount of shares. So they're going to multiply this number by 20 and they're going to divide this number by 20, which means that their total value remains the same, but the price of their stock goes down. So if you are an investor in Google and you buy one share at 26.68, when the split happens, you're gonna wake up the next day, you're gonna have 20 shares at the divided number. So if you buy one share at 2688 and you divide that by 20, the next day when the split actually happens, you're gonna have 20 shares at $134 each, multiplying that to equate the original 2668, and that will be the amount of positions that you have. And you can sell half, you can sell 5 of them, but you will have 20 shares if you own just one Google share at the time of the split. Either way, guys, I hope that makes sense. I try to put it in the simplest form possible. If you guys did like this video, please subscribe to the channel and give us a thumbs up. Thank you for checking in.